Welcome to Daddy Bits, our daily technical analysis show. I am your host, the ugly one, and as always, my amazing co-host,
Teflon John in the building.
Teflon John. Tefleezy Fosheezy is in the heezy for no beezies. Also, you know who has beezies? Paul Pierce. Paul Pierce has a whole lot of beezies, and Paul Pierce is looking for a new job.
How do you get fired on your day off, bro? Like
no. It's not even that. Like, yeah, it sucks that you get fired for going your day off, right? You're on your day off, you're enjoying yourself. What's worse is getting fired to hang out with the 7 to 12 shift. Like the 7 a.m. to 12 shift at a gentleman's club is a very unsavory way of getting fired. Like, imagine that. Like, you risk it for the littlest biscuit.
Those are your bench warmers.
Not even the bench warmers.
That's not like the water boys.
That's not even the practice squad.
Those are the D leagues.
That's not even the D League. That's like deep reserve. Do you remember that movie, The Replacements? That's imagine being fired for The Replacements. Johnny Falco's team. Good. You know what I mean? On the surface,
man, he was so happy about it too.
No, he's excited. We never know. But I heard that he's getting offers from the Hub.
Oh yeah, hell yeah.
He's getting offers from the Hub. Congratulations, Paul Pierce, from ESPN to no ESPN. You know,
he's living his life, bro. Like,
yeah. I mean, I envy Paul Pierce because he's doing what he loves. So who cares?
He's doing what he loves. Going to strip clubs at 8 in the morning.
8 in the morning. It's either you have a problem or you're really that good. Yeah. There's no in between there. But these are the stocks, guys, that you guys should keep on your watch list for tomorrow. We are very excited for these stocks. Just because we see certain things. So if you guys like this content, make sure that you guys hit the subscribe button, post notification bell. Give us a nice thumbs up. So it definitely helps out with the YouTube algorithm. And if you guys want us to cover a stock, please make sure that you guys put that in the comment section below. But with that being said, let's get to it.
Yeah.
All right. Let's take a quick look at the QQQ. Today was kind of interesting.
Today was ass.
I mean, it's but because
it was choppy as hell. You see that
right here?
That doji right there?
Yep.
That means a doji represents indecision, basically. That means buyers and sellers can't agree on a price for the day. So that's why it finished flat.
But it's an inverted cross, so I'm a little bit more weary now.
Yeah. So that's I don't want to say, but we might have hit a top for now and maybe consolidate. We might get some more choppy waters tomorrow.
Got it. No, I definitely do see that too. I mean, remember that there's still these gaps that need to be filled.
Yeah.
I mean, this gap got filled. There's this gap that needs to be filled, though.
That sucks.
I know. I mean, that's what happens when the market runs too high. It's like Icarus. It goes too high and then we all get burned. But intraday, we definitely did see that top right there, and it kind of faded away.
Yeah, what the heck was that?
Back in the middle.
It was doing so well. It was doing so well, and then
I know. I think people get scared sometimes. People just get scared. You know what I mean? Let's take a look at Nasdaq futures though to see where we currently are sitting for tomorrow. Not looking good. I mean,
I do think. I mean, we're up, 18, but really, I do think this is just my opinion, my humble opinion. I do think we are going to see Nasdaq lead throughout the month of April.
Oh
yeah, because it's lagged for the past couple of months.
This right here, look at this. This kind of tells me something. Big ass flagpole.
Yeah,
big flagpole. Consolidate for another 3 days.
Then big flagpole again.
Big flagpole again. I see that. I definitely do see that.
Man,
I think if you are going to go long on QQQ, I say you should.
Bro, this episode should be called polls.
Polls.
I just came up with that. Anyways, let's go back to the NQ. You see that? That's a flagpole right there.
Call it the pole position.
Man, we messing with the wrong kinds of polls. At least we're getting paid. Is that the other way around?
Oh my God. It's better to have a flagpole than polio.
Where did that come from?
Left field. Also, where did Paul Pierce getting fired come from?
That's like, we have vaccines nowadays. Like, I've never heard someone getting polio nowadays. All right, so I do think tech, like, we've been talking about this for the past couple of weeks, and tech's been leading.
Yeah,
tech's been leading. You know, the Dow needs to calm down. It needs to chill, and it definitely
needs to chill. Yeah, it definitely
been lagging. So yeah, so if I were like, I've been loading on tech, and it's been paying out. So just check out QQQ, compare that to SPY or the DIA, and you'll see.
Mm-hmm. So speaking of the SPY, let's actually take a quick look at the SPY here. That is ready to come down. I think that's ready to come down, because if you take a look at the RSI hammer right here.
Yeah, inverted hammer.
Yep, and this inverted hammer, that's about to come down pretty soon. So
we hit a top for now.
Yeah, we hit a top for now, and we did say roughly around 400. If it ever hits 410, then make sure that you guys protect your capital at that point, because we're not saying that we're going to hit another bear market, but this meteoric rise right here just makes us a little weary, because we know how the market kind of reacts to going too close to the sun.
Yep. You know what I mean? We're about the bonds.
Yeah. Again, we're going to be blaming. What are we blaming this time? You know what? Let's start thinking about like things we should start blaming market turndowns on.
Yeah. I gotta catch up with current events.
I know, but I haven't seen any bad news yet. Yeah. The infrastructure bill definitely is. I think that's one thing that could potentially like throw a wrench in our plays if they decide that the infrastructure bill is not going to pass.
Well, no. Here's the thing: they're not going to sign it until summer, right?
I think so. There's a lot of things going on right now.
I think July. So there. I mean, you know, you can't just count your eggs. You can't count your chickens right now, because a lot of things can happen within the next 2 to 3 months, and there's going to be some revisions. Obviously, someone's butt's going to enter the chat room and say, "Hey, you know what? We don't want this in the bill."
Someone's going to be a hater,
huh?
Someone's going to be a hater.
Oh, of course.
Someone's going to be a hater. All right. Well, so that's the overall market today. Let's take a quick look at the stocks that we want to cover for you guys. Yeah. The first stock that we want to cover is Alibaba.
Man, one of my, top 8 stocks for the year. But the thing is, they don't want to run, because, the CCP don't want them to run.
The CCP won't let them be.
They've been a hater.
They've been hating. I think because let's just face facts here. Alibaba is that kind of stock that, in a way, revolutionizes e-commerce, right? Especially in one of the largest markets out in the world.
In China, exactly. Dude, like, this should be, they should be going toe to toe with Amazon, but they're only half the size of Amazon.
Right? Let's take a look at Mercado Libre.
Nelly.
That's trading at a high premium.
Yeah.
Right? But Alibaba's bigger.
Mm-hmm.
You know what I mean?
So for Alibaba, we drew a wedge right here. The wedge is alive, okay? Now, you can plan this, multiple ways. Check this out. So if you were going to trade Baba, where you want to set your stop loss is at around 220. Obviously, if 220 breaks, then you're going way lower because you're breaking lows, right? Now this wedge right here, obviously we broke resistance already. Okay, we broke, what's that, 228, 229? Yeah, 228. It already broke resistance right here. Plus, Baba has been consolidating for the past month.
Oh yeah,
like we're talking about like for the past 3 weeks. It's been stuck on this range. Now, a few times it got rejected on the 20. I'm sorry, on the EMA 20. Now we highlighted it right here. So the EMA 20 is that red line right there, and it got rejected how many times? 1, 2, 3, 4, 5. So 5 times, really, I would say. So keep an eye on this one, because what you want to use as support would be at the EMA 9. So
which is this white line.
Yeah. So check this out. If it opens above it, I would buy it at the 229, and then I would set a sell at the EMA 20 for now. Okay. Because it got rejected today. It might get rejected again tomorrow. Okay. Who knows? But if it breaks through, what's the EMA 20 at? 232.
232.
So you can really buy 228 and sell it at 232. That's a 4-point gain. If you have 100 shares, that's what, 28 grand. You make $400 for the day. Who makes $400 a day? Pushing buttons. So if it breaks 232, then even better. You want to wait for it to come down, because if it comes down and if it's a false breakout, then there's no support. It can always come down. That's good. You waited. You didn't have to push the trigger on that one. So I would set the buy at 228, stop loss at 220, because that's your last resort. Okay, that seems like a terrible risk management right there, but 220 is your last call right there. 232 seems like it's going to break, because you see the MACD, it's going to try to open up. The RSI is pointing upwards. This has momentum because a lot of good things are coming out of China right now. So Chinese stocks did well today too.
They did. They definitely did. Let's take a look at intraday. Yeah, I mean, it's just all around. It was pretty good.
I think this has legs.
Yeah, this has definite legs. I would definitely follow what John said. Again, not financial advice. These are things that we use as traders, as our own indicators. And if we were trading this, that's exactly how we would trade it. Unless you're buying Tesla at the top. But intraday, it does look pretty good. I think the fact that it didn't really break down towards the end is going to give us more room to move. You know what I mean? So the next stock that we want to cover is Virgin Galactic Space. Space is very interesting, by the way. Space is interesting because it's a fairly volatile stock.
It is, yeah.
It's a very volatile stock, but what this consolidation period tells me is, wow.
Yeah, this is somewhat ready, and it's been staying on this level. Same with Baba. Okay, it came down, consolidated, broke the EMA 9, which is your short-term resistance. Really, for this one, if the market's green tomorrow, most likely this will open flat, 30.70 or whatever. So if you want, buy it at the EMA 9, which is what, 30.50, I think.
Yep.
Yeah, 30.50-ish. Yeah, 30.40, 30.50-ish. And then, set your first target at, 31.90, 32-ish.
31.88.
Yeah, because first time it got rejected was back in the 16th, was it? March 16th? Yeah. So there's a fairly good chance that it'll get rejected on the second turn. But really, this one's a good swing because they're coming out with a test flight in May. If that gets approved, then hey, sky's the limit for this one, because it's also in Kathy Wood's. Kathy Wood's ARK X. Is it ARK X? X fund. That also has LMT and all the big names. Boeing's in there too. But yeah. I like this chart right here because it's consolidated for the past month within this level. Same with Baba. This one has potential because we know for a fact that SPCE is volatile and can run.
Oh yeah, it could pop.
This chart is predictable.
Yeah, it is very predictable. As you can see right here, the fact that the MACD is kind of curling around the lagging line. The active line is curling around the lagging line, and see how this kind of opens up a little bit more. So once the mouth opens up, we're in it to win it, because I feel that this RSI is pretty low still. And we're in it to win it. Did that just come out?
Man, we're on fire on this episode.
Did in it to win it just come out of my mouth? You know who wasn't in it to win? It's Paul Pierce.
All right, what's next?
Oh my god. All right. But before we move forward, make sure that you guys subscribe to the channel below. Hit the post notification bell. Give us a nice thumbs up if you guys like this content. And remember, comment down in the sections. Comment down below the stocks that you guys want us to cover on our future episodes, and we'll definitely shout you guys out too. And the stock that I want to cover, another stock that I want to cover before we get out of here, is Draftkings. Draftkings, good lord, Draftkings is a pretty chart.
Yeah.
Draftkings looks like a chart that you just want to take out to dinner.
Yeah, it looks like a Twitter chart.
You want to take Draftkings out to dinner and just wine it and dine it.
Yeah.
Give it a month or so before you just ask her to go steady with you.
Yeah, this one, you notice the EMA, it's above the 50. Okay.
Yep.
Yes, it did get rejected on the 20. It closed above the 9. So your supports and resistances, they work. Okay, we're not making up these lines. Okay, the green line is the 50, the red's the 20. It got rejected and it stayed above the 9. Yep. So short term, this has potential to pop. Long term, it ran long term. It's staying above the 50, obviously. But for this one, you see the MACD curling. I mean, they got good news. New York's almost there. Okay.
Yep. So once that's approved, this is going to run potentially, I would say, to
swing this one. I mean,
yeah, I would swing this. I would swing this high, actually.
Baseball's coming back. I mean,
it's already back.
I mean, it's already back. I mean, the season's about to be in, so
it's already back. And this right here, the MACD. Oh,
yeah. So this one got a good long potential. You'd want to swing this one. But your stop loss should be, on the 9, on the 20, or on the 50. But if you're really if you're really feeling frisky on this one, just buy shares, long it.
Yeah. Or if you are looking at an option, I would go towards the 6-month time frame. Set your strike price to roughly around the 66, and exit anywhere above 75.
Yeah.
If you are going to swing for the fences on this trade,
that's a 20% gain right there.
Yep, that's fat.
25%. That's a nice gain. Yeah,
that's definitely fat. That's definitely fat. That's it. Any other last parting words for the people? None. Thank you guys for watching our show. Make sure that you guys subscribe, hit the post notification bell, give us a nice thumbs up, comment down below the stocks that you guys want us to cover. Follow us on all our socials. Follow me at Trading Poppy. Follow John at John C Trades. Follow him at Trading Daddies for the both of us. TradingDaddies.com for all your merch, all your news. Robinhood sucks is still a code, 15% off your entire purchase. And with that being said, let's get trading. And remember that the charts do not lie.
Yeah.